All right. Hello, hello, hello. Happy Tuesday, gang. Welcome back to the New York live trading room. How's everyone doing today? Can you hear the voice? Can you see the screen? Welcome to anyone joining on the live stream as well, TradingView or YouTube. I think I started it. I'm not really sure. Hopefully I did. If not, my apologies. But good, 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 good. Let's hop right into things today. First and foremost, let's take a look at what's on the economic calendar. I hit it somewhere. Certainly not as busy as a week or of a week as last week. If you guys remember last week, we had monetary policy scattered all over the week. We had Tuesday, Wednesday, Thursday, followed by, excuse me, a non-farm on Friday. This week is a lot lighter. However, today's going to be interesting, right? You look on your economic calendar. We don't really have any red economic news, and we've spoken in the past about, really taking how news is rated with a grain of salt. Any type of economic calendar that you use is going to be really lagging, meaning that things that are historically important are going to be red, things that are historically not so important are going to be yellow. Then in the middle is going to be orange, or they may rate it 3 stars, 2 stars, 1 star. But that's not always the case. There are certain times where, quote unquote, high impact news events, red news events, mean nothing. There are times when low impact news events mean the world. And today's an interesting one because you look at your screen right here, you don't see anything red, so nothing that's really alarming. But there could be some sneaky, impactful news events on the radar, and that is due to the fact that we have a lot of FOMC members speaking today. You can see 7:40 a.m., 1 p.m., 3 p.m., and I think there's another one that's not listed somewhere there as well. And whenever those people are talking, it's going to be monetary policy related. Monetary policy is going to be the number one thing that's moving the market, people projecting and trying to figure out what the next chess move is going to be. So there may actually be an impact on the market. So keep an eye out for that. We're technical traders, so we don't really mind that stuff too much, but we want to give you guys the heads up just in case. So for today's trade of the day, and if you guys are joining on TradingView and YouTube, this is what you get. You get one trade, my trade of the day, and then we go on, kick you guys out, and we go on to look at more stuff in the live room. Today is going to be on the loonie, dollar Canada. And I wanted to pick dollar Canada because it follows up on a trading lesson that we did yesterday. So actually, I need to get my notes up, by the way. But if you came to the Q&A session yesterday, we did kind of a two-part lesson, right? So we did one lesson strictly teaching about the RSI, Relative Strength Index, what it measures, how it moves, some different ways to use it. And then we went on to look at divergences, right? Typically with the RSI, the quote-unquote most popular way to use the indicator is looking for overbought and oversold tendencies. Many people, in fact, think the RSI stands for the reversal strategy indicator because, again, the common way is like, hey, when it goes overbought, you sell. When it goes oversold, you buy. But we looked at different ways to use it, and that is using divergences and using it in two different ways, using regular divergence, standard divergence, which is typically used in like a counter trend fashion. Got to be careful with those words. And then hidden divergence, which is known differently across the industry, but the most common form of hidden divergence is used in a trend continuation opportunity. We're going to look at a potential hidden divergence opportunity here on dollar Canada. But first, we have to go through a process. That process has 4 letters in it. Does anybody know what those 4 letters are? I may have spoken about this process before, perhaps in every video or every day that I do this. IPDE, identify, predict, decide, execute. I had a guy reach out the other day. He's like, man, Akil, I haven't watched your video in like 2 years, and I came back and you're still talking this IPDE stuff. I said, yep. Darn right I am. Darn right I am. Yep. It is a system that works, right? McDonald's has a system that works. They keep using it. They make little tweaks and whatever to the ingredients, adding or to the menu every once in a while, but the system works, right? The system, the process works, and it's running like a finely tuned machine. Don't get cute. Don't mess it up. So let's go through that process: identify, predict, decide, execute. Let's first start off by identifying what the dollar Canada has done. Oil down, by the way, as well. So, what has the dollar Canada most recently done? What would you guys say? Ooh, I don't like that. What was I using that for? I don't like. Ugh. I don't like how skinny that is. I'll use it for the RSI. There we go. Let's get that better. There we go. Perfect, perfect. We have broken a previous level of structure resistance, right? You can see price action has come to these previous highs multiple times in the past, right? We've got one level all the way back here. We've got resistance here, 2021 August. We've got resistance here, late December, late 2021 December. We don't have a full test, but we come up to test this area, right? The zone of this wick right here earlier this year in March as well. And of course, if we look left, we know that an area that was previously resistance, there's a good chance that it was also previous support. We've got that a few times here. Anyone remember what this level or this type of formation is called when you have support that goes to resistance or resistance that goes to support? We just spoke about it in yesterday's or the weekend video. The ice zone, why would you use that? Use the nice zone. The structure swap, right? Ice zone is better. Hats off to Peter Brandt. Give him credit for that. The ice zone is better. Much better than the structure swap, right? So a key level of structure. So we have just violated that on the daily. That is what we identify. That allows us to make the prediction that price is likely to continue in what direction. Doesn't mean it has to, right? We're just playing probabilities. It's likely to continue higher. So right now we started setting up our bias for the trade. We started looking at what's happening on the price chart. We started figuring out, hey, what direction do we think we're going to go in? And that allows us to really focus in on a single part of the trade and instead of getting that paralysis analysis where you're looking earlier, right? For you guys that were in the Q&A yesterday, remember we talked about hidden divergence and regular divergence and how it can get very confusing, especially if you don't know what it looks like. Because, and I believe this is the case as well here, you can have regular divergence and hidden divergence at the same time. And if that happens, you're getting two conflicting signals. You're getting your regular divergence saying, hey, reversal, reversal, reversal. You're getting your hidden divergence saying, hey, continuation, continuation, continuation. And then what do? Brain just blows up, right? So you got to figure out what side of the market you want to focus on. You want to have a bias. And that example of paralysis analysis, that just doesn't go for divergence. That goes for anything. Because think about like this. I mean, and we do this all the time in here. There's always a reason to buy and sell. Am I wrong? Like you can make the case, especially for you experienced traders out there, you can make the case at any time in any place in the market. You can make the case to be a buyer or a seller. You can, right? So we have to have a bias going into things or we're going to confuse ourselves, especially if we have an outside confirmation bias. So price action is likely to go up. So we can look left. We can identify our next level of structure, right? I see a key level of structure right in here, right? You guys like that level as well? $31s. Again, got a little bit of support, support, support. A little bit of resistance up here. We could bring in a few more things as well, right? Let's just bring in our volume profile. We'll do a big swing from swing high to swing low. See if anything stands out in that area. We can do fibs and all that stuff as well. You guys know the routine by now. Oh, look at that. I don't like that color either. So let me change that. I got a thing with colors, guys. I'm sorry. Forgive me. I'm very shallow. But you guys like what we're seeing there? After I move it out my screen, of course, so you guys can actually see it. I don't know what I'm doing here, Akil. Sorry, I was doing some testing, so I messed with my colors of the chart for testing, and now I just got stuff that's all weird, so I gotta change it back. But we had a nice volume spike right in this level. Believe it or not, actually, the first time I actually drew this in, so it's pretty convenient that it works out that way. We can bring some Fibonacci's in as well. It looks like maybe right below 50%. I think I'm going to be a little bit off here, between the 32 and the 50%. Swing high to swing low. Yeah, look at that, right between 3 and 2 and 50%. So not a lot of Fibonacci confluence as far as the retracement goes. One thing we can look at is a Fibonacci extension from our swing low here to swing high. This last move before the retracement there, that may give us something. A 127 around that area. It's not a lot of Fibonacci love, but we got a 127 extension in that area, so it is a little bit helpful. But yeah, probably a decent level we can look for as far as making a projection. So we know that price is likely to continue higher. We've got an idea of where we're likely to continue higher too. We can worry about the details on that later. But right now, what we're doing with that first part of the process is we are asking ourselves, is there room for me to actually trade, right? There's one thing to project and predict that price is likely to go up, but if there's not room for it to go up, is the trade worth it? Right? So just to give you kind of another example, right? So let's say this is a key level of structure we identify here. And let's say we've got a trade that looks like this. Would this trade be worth it from this perspective, from here to here? Right? Probably not. So again, we want to make sure there's room to actually profit, because if not, we don't want to waste energy on a trade that's not actually takeable. So that's why we want to make sure that, hey, not only are we predicting what direction is price likely to go into, but where is price likely to go, to make sure that it is actually a trade that I can get involved in it. And sometimes it's not. You guys have seen many cases here in a live room where we have overlapping levels of structure, right? And it's like, hey, we're likely to go higher, but there's another structure level like 10 pips above. So, not really a trading opportunity. And that way we can conserve our energy. Evan says, can we discuss the 131 zone? Sure. What would you like to know, Evans? I'll pop back up to the daily. Welcome, by the way, Jay Houston over on YouTube. Thanks for joining. While we're waiting for Evan's question, hit that like button, please. I think it does things. I don't even know. We're supposed to say hit the like button. But sure, we can discuss. Yeah. Douglas says you're describing putting in the same work. You're describing putting in the same work to your stops and targets as you put into your entry region. Correct. Yeah. So it all works together. It all flows together. For me, targets are a little bit more difficult because they're more dynamic. So for stop losses, they're easy for me because it's going to be the same thing every single time. For targets, that's where it gets. If you're taking a target taking strategy where it's not like, hey, I take 10 pip target every time, or ATR target every time, or 1-to-1, risk target every time. If you're going to take targets at like a dynamic level, and by dynamic level, I mean, it's going to differ depending on the trading situation. I think that does take a lot more analysis. But yeah, you're 100% right, Duncan. Over the years, I've always said this, and there was a study a long time ago to back this up. But I've always said that I don't think traders have an issue finding good trades, or either and even getting involved in good trades. I think a big issue is target taking. Either taking targets too conservatively and not getting enough off their trade and putting themselves in a bad risk reward situation. And that's, let's not even talk about the psychological stuff. That's a whole different category. Or shooting too far with targets, where they shoot so far that the market, their targets aren't actually at a place where the market's expected to go to. Because of that, they get losing trades or whatnot. And there was a study done a long time ago by, I think it was some brokerage. I think it was FXCM, where they saw that the majority of traders have a better than 50% win percentage. So if the majority of traders are winning more than 50% of the time, it doesn't tell you that we can tell you there's randomness in the market, but it tell you that other things are affecting it as well. So yeah, you gotta put the work in for stops and targets, entry stops and targets, all three. Evan says it's broken multiple times. Okay. Um, Still not sure what you'd like me to answer for you. What is the, I guess what confusion can I clear up? I'm going to zoom in on this level right here. I apologize. I when you ask me questions, it has to be very specific. My mind, I got like a male brain, real bad male brain. Like my mind doesn't really do good with like non-specific stuff. I'm not good at reading in between the lines. But what would you like me to answer? You said it's broken multiple times. Yep. Correct. So again, and that line is right up here. It's about 131.08. I just called it 131 even. It is broken to the downside and upside after. So for me, it's not a valid zone anymore. So I would make the case that it's even more of a valid zone because it was broken to the upside and the downside. So think about this. The only level of structure that is not going to be broken is your outside levels of structure, your all-time highs. So, I mean, we could look at it like this. Has this level of structure been broken right here? So has it been broken to the upside or downside? So I guess the question I would ask, real quick, Trading View says which indicator used, which shows the up and down arrow. I just manually put those on. So I just manually put an arrow on to kind of show the levels of structure. So I guess the question is this. So the level. So this we talk about powerful levels of structure, and we talk about structure swaps and ice zones, right? So I would ask you this, Duncan, or not Duncan, sorry, Evans. Do you think ice zones are key levels of structure, levels where price action has gone from support to resistance and resistance to support? Or are those not valid levels? Sure. Okay. Well, this is the same thing as an ice zone. So if ice zones are going to be valid, what makes this one invalid? This is no different than a level of structure where price has found resistance, then resistance was broken and became support, then support was broken and became resistance. So what about this particular level broke to the downside, upside? What makes this different than maybe a different type of ice zone? I need to take more tests on that one. Okay, but is this different than an ice zone for you, or is it the same? For me, it is not an ice zone. Okay, why not? And George said, "Is this major structure?" No, this would not be major structure because it's not the top or bottom of a swing. So the major structure would be the start or the finish of a swing. Now, you go down to a lower time frame, the zone that we just circled can certainly be a major level of structure. But on the daily, this is kind of all in the middle of the bigger swing. The bigger swing is a bigger swing. Sorry if I zoom out here like that. But I'm curious what makes this not an ice zone for you? Because of the candle from 11 November 13, 2020. November. Because of this right here. Or the bullish candle. 11/13. I don't know where that's at. This green candle right here. The green one right here around the circle. Okay. All right. And what does that singular candle do to change? And again, I'm not arguing with you, just trying to figure out just to clarify, so we can, the other traders in the room or the traders listening on the live stream can understand exactly what you're looking at. But what value does that candle have that throws off the level of structure? And I'll put an arrow if you guys can see it. I'll just move this one. This green one right there is the one that Evans is referring to. George said, "Would you consider taking sells at that level if it met your rules?" Oh yeah. Mm-hmm. Yes. Yep. So here's the thing, and we talked about doing analysis for targets as well. So this is a very wordy way of saying it, but I used to call this method "think like the other trader." So when I'm looking for longs in this situation, essentially the place where I want to be out of my longs are the exact same place where I would want to get into shorts. So when I'm looking for targets as a buyer, I'm asking myself the question: if I was a seller, where would I be interested at? You can also say, where's the first sign of danger? Is another way of saying it. But you can say, if I was a seller, where would I be interested at? And the area in which your seller is going to be interested are a good place for your buyers to be out of the market. Vice versa, when we're looking for a trade, let's say I'm a seller, I'm asking myself, where are the buyers going to be interested in getting out of the trade at? And that same area in which the buyers are interested in getting out, that's where I want to be a seller, right? Does that make sense? It goes back to the same dynamics about buying and selling pressure, right? If buyers want to get out of the market, what do they need to do? They need to sell, right? If you're a seller, you're looking for areas where you're going to get more sell orders, right? So it just makes sense. Right. So yeah. So typically your target location should be, if you're doing this method of just kind of think like the other trader, your target location should be at areas where you think the opposite party would be interested. And if you are someone of the opposite party, this is one of the reasons I think being a counter trend and trend continuation trader helps me, because I'm already thinking like the other side of the market. So I just basically have to ask myself, okay, Akil, where would you be interested at? And those would be the levels that I want to get out at. A few questions before we get to Evans Roden again. Jay says that's a smart way to look at it. Thank you, Jay. Real quick on Trading View. Hey, from India, beginner in trading. Could you please, which strategy I follow in the option trading? I wouldn't recommend that you follow any strategy. I'm not the best with options, so you're going to want to go to an options specialist. I don't know all the iron condors and all that fun stuff. So if you're looking at trading options, I can't really help you there. I can help you with the technical analysis portion of it. But as far as like the hedging strategies and whatnot of options trading, you're going to want to see or refer to someone options specific. That is a whole new world. You can reach out to Charles. Charles traded options, but options is a different game. It is a different game. The analysis is still the same, but the actual strategy is a different game. All right. So let's go back to the question. I got to figure out where I was at. Evan says, because it's above the zone. Sorry for asking questions. No, this is the Point Live room. You're supposed to ask questions. This is our playground. This is our weight room, right? If you go into the weight room and you're lifting something wrong and you're like, hey, or you see someone doing another lift and you go ask them, hey, what does that lift work on, right? You want to ask those questions. It's how you learn. So never apologize. George says, cool. One more question, or let's go to the first one. So it closed above the zone. Okay, so I would say this. I don't think it closed above the zone, but that's going to depend on where you draw your zone at. So when we're looking at structure, we're always looking at zones. Yes, you want to have like, excuse me, if it's an outside level of structure, we have our rules for higher high, higher closes and stuff like that. But when you're looking at inside levels of structure right here, it's hard to say it closed above the zone because we don't really have a zone. But if you've drawn out a specific zone, I think this would be hard to say you closed above the zone for me, especially because, I mean, you have this candle that is, it's all up in the zone. But yeah, if you have a specific structure zone drawn out, and if this closes above the zone, then that makes a violation. Then yeah, if that takes away the importance of this level, then I would not look at this level. So it's all going to be up to your interpretation of structure. So if you don't find this to be a valid level of structure, just look for a different level of structure. It is still going to be an outside level of structure because this new zone or this new area has not been violated. So I don't know if that's going to be important or not to you, but that can still be an issue. Um, but yeah, if you don't find this to be a level of structure or a zone of structure that is relevant, if it's been violated, if it's irrelevant, then the next step is you got to find the level which is relevant, and that's going to be a level that you'll shoot for targets at or look to get involved at. So we don't all have to view structure the same. I also have the same question. Sure. What was that? What was that question? On trading view, I'm going to butcher your name, so I'm not even going to embarrass myself by trying to say it. I apologize. But yeah, shoot your question and I'll look at it. Mel on busy one today. Mel on YouTube says, do you still do mentorship? Yep. Tier1trading.com. Come sign up. Take that 14-day risk-free trial. And real quick, George says, back on the main chat. It's a busy one today. You guys are making me work. You're making me earn my buck. George says, and Evan, if you still have questions on structure, don't hide. Don't feel like you have to be quiet. We can discuss this every day until the questions are gone. So don't ever run away from it. I enjoy it. This is the highlight of my day, is explaining stuff and making sure stuff clicks. But George says, okay, cool. One more question on this level. Since it's not a major structure, what importance would you give this level? Structure swap? Yeah, it's still a level of structure. It's just not a major level of structure. Yeah. So just because it's not major level of structure doesn't mean it's not important. Right? Just because it's a major level of structure doesn't mean it's not important. Again, unless you have rules that say, hey, I can only do blank at major levels of structure. Just like if you had rules that say I can only do blank at outside levels of structure or only do blank at inside levels of structure. But I don't want you guys under the opinion that, hey, we look at major levels of structure as outside levels of structure that haven't been violated, key or tops and bottoms of swings, stuff like that, right? The decision points in the market, right? Does that mean that every other level of structure is irrelevant? No. Or I should say, could be. Again, depends on you as a trader. If you are someone that's only going to pay attention to major levels of structure, then yes, every other level of structure could be irrelevant. If you're someone that's going to trade at major levels of structure, minor levels of structure, inside levels of structure, outside levels of structure, then all of those levels are relevant. You may give them different grades. You may be more aggressive. You may require a lower CTS score at major levels than minor levels. But it doesn't mean you have to completely ignore them. But that's going to be up to you as a trader and the decisions that you make in the market when you do analysis. There's no wrong or right answer. I think a lot of you guys are looking for wrong or right answers in trading, and trading is an art and a science. There is a science component to it where I think there are key rules that need to be followed. I think the business side of trading, there are key rules that need to be followed. Like, you should use a stop loss. You should have a trading plan. You should have verified backtesting results before ever trading live, like stuff like that. Those are non-negotiables in my opinion. But then again, that's just my opinion. But there's also an art side of it as well. And we know that from learning how to read structure, how to read swings, how to interpret candlesticks. And art's going to be a little bit different for each person. Could you please suggest some good community books or anything which helps me understand the world option trading? Again, I'm not familiar with options, so I can't help you with that. I apologize. That is, I am not going to tell you something. I'm not going to make up something just to give you an answer. I'm just not familiar at all with options, so I'm going to be zero help. If anyone out there listening, if you know any options people that you would recommend, shoot it in. I can forward it to the trader, but I'm just not going to be any help. Real quick on YouTube, could the issues that Evans has be resolved with knowing how to draw support and resistance and knowing that these are areas and not specific lines? Yes and no. I don't think I do think Evans understands that these are areas and not specific lines. I do think that is something that more traders need to understand, though, in the market. I think a lot of traders get in trouble, especially when it comes to support and resistance, even when it comes to like Fibonacci and stuff like that, is that everything in the market essentially is going to work in a zone, right? And the reason for that is because nothing perfect. The reason for that is because, particularly in forex, there are different quotes depending on your broker, so everyone's chart isn't going to look the same. But support and resistance are going to work in zones. They're not going to be at specific points. You're looking for areas. So I don't think Evans in particular has that issue. I think he understands that. But I do think in general that is a major issue for newer traders, because I get the question so many times, where do I draw the support or resistance line? And understand the concept that it is a zone, I think is big. Please show Bitcoin on a live chart. I'm sorry. For the trade of the day, we only look at a single trading opportunity. So maybe another time if Bitcoin has something juicy. But today the chart we decided to focus on was the dollar Canada. If you want more, however, you can hop in the live room and we got a few more hours in here so we can look at stuff there as well. Yeah, I think he's looking for options though, not just stock trading. But the playbook is a good book. I would recommend reading One Good Trade first though. Real quick before we finish up on this, George says, yeah, it makes sense. I had to end my back test because I noticed I'm not 100% certain on the levels that I'm looking to trade, and I should know that beforehand. Yes, good. I remember Orsi was on your case for a while about that. You're looking to get into back testing, and she was like, do you have a plan yet? And you were like, yeah, kind of. Yep. Yeah, try to be. So yeah, if you start your back testing, you find that there's some confusion in there, maybe there's some holes in your trading plan. Yeah, just take a step back, work on filling those gaps, and then resume. All right, so let's finish up this trade. Talking a half an hour already. These trade of the days are supposed to be short and sweet, so I apologize, YouTube. Although you're loving it, I know you're loving it. Getting back to the point, I want to talk about hidden divergence a little bit. So we got our, if I fast forward here. So we got our higher close. We got our pullback, right? So going off of yesterday's training lesson on hidden divergence, I need your opinion. Is there a chance of the market going up? I can 100% tell you with certainty there is a chance that it may go up. But I want you to listen to my words very carefully. I can tell you with 100% certainty there is a chance that the market can go up. I can also tell you with 100% certainty there is a chance that the market will go down. Now, I would say this. If you ever need someone else's opinion on a chart, and I'll let you guys answer this question. If you ever need someone else's opinion in order for you to do what you need to do on a chart, whether it's take a trade, whether it's exit a trade, whether it's confirm a signal, should you be trading? If you ever need someone else's opinion to validate your decision on a chart, should you be trading that chart in the first place? No. And I don't want to sound mean, because I sometimes come off, if you don't know me, if you know me, you know I'm very steady on this concept, but I don't want to sound mean if this is your first time, because I'm not mean, but I am going to tell you the truth. So I'm not going to sugarcoat stuff for you. I'm not going to pump you up when you don't need pumping up. I'm going to tell you the honest truth, because I don't think there's enough of that out there in trading. I think there are so many people just trying to make themselves look good or sell you this or brag about that. Like, you need the truth. Like, that's my whole deal of being a coach, right? That's me and Jason Greystone's mission, is to, we've done this for many, many years, is be contrarians and just spit truth at you. And not everyone likes it, but it's what you need to hear. But if you ever need validation, it means that, one, you don't have a trading plan. It means, two, you probably need more work on your analysis. And all that stuff is fine, right? But we don't want to make a decision based off someone else's opinion. Because how valuable is my opinion, right? If I don't actually, let's take, if I'm a regular, some trader on Twitter, and I give my opinion on Bitcoin, but I'm not actually trading Bitcoin, there's nothing at risk for me. So you'll get people out there that just saying, oh yeah, it can go up, right? Because there's no risk of saying that. So you gotta be careful with that. Um, but yeah, so I mean, we can again, we're already over a half an hour in on this live stream, so we're not going to look at Bitcoin. I try to stay fair to our premium members. We only look at one trading opportunity a day. Um, but hop into the live room. We can take a look at Bitcoin, or maybe if there's something interesting, maybe we do it another day for the trade of the day. So I don't mean to sound mean, but yeah, I wouldn't trade. I wouldn't trade it if you don't know what to do. If you're in a trade and you're not sure what to do, I would exit the trade immediately. Man, lots of questions today. I promise we're going to finish up on Dollar Canada, guys. Um, do you pay attention to fundamental analysis as well as technicals? Yes, we pay attention, but fundamentals don't dictate our decisions in the market aside from the home run trade potential that comes up every once in a while. But we do pay attention to fundamentals, but we are technical traders here. So fundamentals are secondary. We mainly pay attention in order to figure out what do we need to avoid, or what times do we need to avoid being in the market. Or like I said before, every once in a while, if there's a home run trade where, and this is more of an advanced thing, where the fundamentals line up with the technicals, you can get some really big pops, or some swings and misses as well. Need your opinion. Mark, go up. Nope. Should be studying more back testing. You're an expert. That's why I'm asking you. Thank you. Appreciated that. And again, I hope my opinion makes sense. I don't mean it to sound mean, but that's just the truth. I'm sorry. Um, no, but you can blow an account just to make your trading story juicy. All right, so let's get back to here. Finally, following up on yesterday's lesson on divergence, almost 2-hour lesson. So we're looking at our ebbs and flows in the market right here. We know we have a higher high, higher close over structure. If you don't remember that, go back 30 minutes ago for when we first started this analysis. So we've got a pullback, right? So pullback traders, typically what you're looking for a continuation opportunity is you're looking for a pullback, a retracement, some relief, whatever you want to call it, and then looking to catch the next move up, again, ultimately to that 131 even level or wherever you have projected up there. Now, here's where the hidden divergence may come into play, right? And divergence is basically when your indicator or oscillator is... Tony, what are you doing on YouTube? Get over here, Tony. Get in the live room. When your indicator or oscillator is doing something different than price action. So without making this too confusing, because hidden divergence is a little bit confusing, right? If we get a pullback, and we know that a pullback is valid as long as it stays above this level, right? We would have higher lows. Would you guys agree? If we don't have higher lows, it's not an actual pullback. So if we get a pullback, doesn't matter where it comes to, we would have higher lows, right? If and I'm using the RSI, that's my indicator of choice. If our RSI creates lower lows, meaning we spike down here below this low, we would have our indicator printing lower lows. We would have our price action or our price printing higher lows. That is divergence because it's a difference. Does that make sense? They should be moving similarly, right? As our chart prints higher highs, right? We should be seeing higher highs on the RSI. As we print higher lows, we should be seeing higher lows. This would be divergence. And in this particular case, this would be a case of hidden divergence, which would be a positive sign for a continuation opportunity. So pullback trade here on Dollar Canada. I'm going to get this into our pro trade log. I know we've been going at this for a while, but any questions on this, especially TradingView or YouTube, because I got to kick you out soon. Live rumors, we can dig into this in more detail if you want, especially and Evans, if you want to make some predictions on maybe different levels to go for, we can do that as well. But let me know if you have any questions, people on YouTube or TradingView before I boot you. Tier 1 members, give me a second. I can't type and talk at the same time, but I do want to get this opportunity into our pro trade log. I just got to load up my site and go through all the background stuff that I have to go to. And then we'll get going. By the way, if you guys are new to the YouTube channel, subscribe. Don't miss all the great stuff I put out. Hit that like button as well. Give me some support. So got a bonus session today. Lots of action. Lots of good questions too, which I love. But let me get this into here and then we'll get you guys out of here. Thanks. The Pro Trade Log is basically the place where we share ideas over on the platform. So it's not a signal service, but we do share ideas of what we're looking at. And many of our traders can see examples of the different things that we're viewing. So if someone is learning about divergence, for example, and they go over to the Pro Trade Log, they want to see an example of, hey, here's a trade where divergence comes into play. They can go there and educate themselves, or it acts like a pro trade floor where there's more eyes on the market. So, if we have a lot of pattern traders, for example, and maybe someone misses something, you head over to that Pro Trade Log or head over to the chat, and maybe you see something that you didn't see before. So, just updating on all the trading opportunities that are on my radar. My YouTube channel, just Akil Stokes. If you're on TradingView, it should be in a little signature thing that I do at the bottom of this live stream. Maybe I don't even know what this live stream looks like. But let me get this in. I'm trying to talk and say at the same time. Give me a second. USD CAD daily to 4-hour potential bullish pullback. Nope, not back pull. Pullback trade. All right, we got that in there. Good to go. YouTube TradingView. Thank you for joining. I'll see you guys tomorrow, same time, same place. Live room members,